We found ourselves in a very unfortunate position within the Ethereum community where we were a bit complacent. Also, we were tackling a very hard problem. We're trying to solve this problem in the right way, in a long-term way and not, create more problems down the road. And that's hard.
I guess you're an Ethereum maximalist. I haven't really had one on my show. So it's good that you're talking about these things. Would you call yourself that?
Oh yeah, for sure. 100%. Despite what people may have said or what you've heard or what you've read or seen on crypto Twitter or influencer or whatever, Ethereum is now scaling. We're starting to see AI really, really go into areas that people thought were either not possible at all, would never be tackled, or, would be 50 years in the future. And the acceleration of technology is this very scary thing, right? So this idea of like the singularity of this point that we're rushing towards, that past which you really can't work out what the world will look like.
The problem with AI is that when something does happen, you'll hear about it on a Friday, and then everything will be over about a Sunday.
Maybe Friday afternoon.
Yeah, exactly.
Like, interesting thing, having been in crypto for a long time and seeing how difficult coordination is, I worry that we may not have it in us to coordinate our way out of this problem, and that it may just, kind of steamroll us without us even being able to figure out a solution around it, which is a little bit concerning.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs, sharing our vulnerability, overcoming our fears, transforming ourselves so we can transform the world. How far can we go? This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Kain Warwick, the entrepreneur, DeFi pioneer, and blockchain developer. In 2016, you founded Synthetix, a decentralized synthetic asset issuance protocol that allows users to gain exposure to stocks, indices, currencies, precious metals, and other assets in the form of ERC-20 tokens. To date, Synthetix has processed billions of dollars in trading volume and has a current total value locked of over $700 million. Before this, you founded several startups, including Blueshift, Australia's largest cryptocurrency payment gateway. You are considered a DeFi OG and called the father of modern agriculture in a reference to the yield farming boom of 2020. You also feature as number 33 in Cointelegraph's most important people in blockchain. Kain, welcome to London Real.
Thanks so much for having me.
Hey, great to have you here, and excited to go deep on DeFi and all things Synthetix today. I wanted to start with a quote I heard from you recently when I think you said that the DGov is probably more important than the DeFi part of Synthetix, or will be over the long term. And I was wondering if you could talk about the transition you went from, say, a foundation to a DAO, and your thoughts on maybe how other companies should kind of embrace this. We had your brother Kieran on Friday, and he was talking about, this concept of a DAO. And I know you both are entrepreneurs, like hardcore startup guys from the past. Just wondering about how your thoughts have gone through on this and how this transition's been.
Yeah, it's something that I think has been an interesting process for me as a founder, because, as a founder, you feel like you, rightly or wrongly, I think, are in this like privileged position to like make all these decisions and, control things and push things and drive things. And, a lot of it comes with this kind of founder mythos of like, working hard and grinding and, hustling and all that stuff. And then you hit DeFi and you hit decentralized systems, and you realize that, open governance and transparency and, this kind of all this stuff that's very antithetical to a closed, centralized, hierarchical organization is actually extremely powerful. And so you have to get your head around that and adjust your worldview. And I think that my perspective, going into DeFi and going into startups was very much about, openness and transparency and fairness in markets and all of this stuff. But when you have to live it on a day-to-day basis and actually, cede control to a community, it can be challenging sometimes. But I think the results sort of speak for themselves, that you end up in a better place, you end up making better decisions, when you do it in an open and transparent way with the community, as opposed to, in a closed, opaque fashion.
Yeah, I've had this conversation with many people on the show. And I think Stani Kulichev was here, and we were talking about even VC in general, how it's almost is by definition almost Web 2.0. That's like, let's put the investments in, let's make most of the money. And yet now you're trying to transition. Obviously, all the companies you founded in the past, they wouldn't exist without a founder vision and that hard work. But then you want to kind of then pass it over to this community that then takes the ball. It's such a different way of thinking, even that we've been thinking about capitalism and startups for hundreds or even thousands of years. It must be strange, to make that transition. And also, I guess you need a single person and a vision to actually start something. Or maybe that's changed.
I think that hasn't necessarily changed. Okay. I think that, the idea of taking some concept or some market opportunity and someone or a small group of people getting together to kind of take on that market opportunity hasn't really changed. I think you do need that kind of core. What maybe has changed as we've got better tools over the last few years in particular is how those people take it to market, right? How that small group of people goes out and says, okay, how are we going to fund this? What does capital formation look like? How do we make decisions? I think what we're getting to is this idea of like a very short pre-DAO phase where a few people are trying to work out, is this even a good thing for us to put our time and effort into? They get to some conclusion where they say, yes, this is actually a market opportunity. Let's go and take it on. And then they form a DAO and they go out to the market and say, hey, we need to fund this DAO and we want to start coordinating and introducing governance and kind of tackling this challenge. But you do need kind of that initial early group of people to make a decision to go after something.
Right, and previously kind of in the ICO days of 16, 17, 18, and where again, I think you originally got a lot of your funding, it was this foundation model. And then the foundation would kind of allocate, I guess, capital to a blockchain or whatever you might call it. And that was the model originally, but now you think that's no longer the right model. It should kind of transition right into DAO. I was wondering if you could talk about what we learned from that era. Obviously, I think a bunch of protocols are still in that old era. And yeah, your thoughts on how they make that transition.
I think the major one that was probably the longest holdout was MakerDAO. The irony being that, they've got DAO in the name and they were probably, one of the protocols that was like most recognized as a DAO. And they had DAO-like elements, but they also had this, foundation model and they had entities that existed. I think in the last year, they've really made a decision to kind of lean into this momentum towards, DAO only governance models, where you remove all of the, traditional structures and entities and legal jurisdictions and all that sort of stuff, which is interesting because only, a few years before that, they were actually headed in a direction that was quite different, where they were looking at, getting regulated and getting licenses and various other things. So I think they still have a bit of a hybrid model where they want to allow the DAO, this pure kind of approach, to interface with existing entities that might be regulated or licensed or whatever. But the core of Maker, I think, is transitioning to a pure DAO. And they were kind of the last holdout. But there was a period, in 2018 where this was absolutely not clear that, becoming a pure DAO was the right approach, right? And Synthetix was one of the early kind of, projects to really drive towards this. And we shut down all of our entities in 2020. That was kind of it. June 2020 was when all the entities were wound up. And then at that point, it was pure governance, token holders coordinating to solve this problem. So it's been a couple of years now of experimentation and iteration around governance. And it's definitely not perfect, but I think we are iterating towards something that is stable and can be a really good coordination mechanism for people to come together and solve hard problems.
And for anybody that's kind of new to this terminology, how would you explain to, I always say my mom is the best example. She's 78, she lives in San Diego. By the way, she has MetaMask wallet. She's got stablecoin, just for the record, and she likes it. She owns real estate, so she owning these assets is not a big stretch. But how do you explain, say, what a foundation is, and then a DAO, even to define it? Like, how are they core differently? How do you explain that to like the public?
Yeah, so I think a foundation typically is a not-for-profit. So the idea is that, it's not a for-profit entity. It's not trying to generate revenue. Obviously, it needs to pay its costs, and it may have employees and it may, it may incur expenses. But it is a traditional legal entity that, is domiciled somewhere. Oftentimes it's Switzerland, sometimes it's Singapore. In our case, it was Australia. But you set up this entity, and that is kind of the primary coordination mechanism for all of the decisions to be made and how things are kind of, organized, essentially. With a DAO, you don't have that traditional legal entity. So you don't have people that are in control. You don't have directors. You don't have the traditional governance that you would have with a normal legal entity. What you have is token holders coming together to make decisions. And there's a whole bunch of ways that you can make those decisions. They range from direct voting on every single proposal to delegation of some kind where token holders delegate their voting power, but every proposal is still voted on by delegates, to council style models like Synthetix, where you vote in a group of people. Those people, might be 8 people, for example, who make all the decisions. But all of the coordination and all of the processes are underpinned by this token that is the primary coordination mechanism. And there's no reliance on traditional legal structures. You can't go to a court of law and say, this council member did something bad. You have to go to token holders and say, hey, we need to remove this person. They're a bad actor. So it is a very different model. Ultimately, you're still doing a similar thing. You're still trying to get a group of people together to, provide a service or, to create some novel system or whatever it is. It's just about how you go about making decisions and who has control and how those decisions are made.
It's a fascinating idea because it's almost like a social construct. Like, how do we as people govern ourselves? I said I spent 7 months. Don't ask me why, running to be the next mayor of London. I just was looking around at 2020 and some of the madness in the city, and I thought, we can do a better job. So my first foray into politics, and I was an independent candidate, and I just got to see what it was like, I guess, trying to get someone's vote at the end of the day. And when it came down to it, the very last day, it was May 6th was the election last year, I realized there were 2 very strong brands out there. In this country, they're called Labor and Conservative. In America, they're called Democrat and Republican. And at the end of the day, even though we thought we had the best ideas out there, people ended up voting the people into place that they had a brand or they had a narrative or their parents voted for. So it's interesting, when I first started looking at DeFi and the blockchain and what had happened in the DeFi summer and Compound and all the governance issues, I looked at it and thought, wow, I just came from a place in politics where, it's almost just as crazy as the world of marketing or crypto. There's all these weird human habits in there. And I was just wondering, do you ever look at politics and voting and see how that also might apply to DAO governance? And do you see things you want to avoid or things you want to adopt or things you've even experienced over the last couple of years in doing it?
Yeah, so I think, there's thousands of years of governance theory, right? And, the philosophy of governance and philosophy of human coordination, and then, very esoteric rabbit holes you can go down, like voting theory, right? And like choice theory, and how do people make decisions, and how do you ensure, arrive at the optimal decision given, people have different preferences that you're trying to, balance, right? And ultimately, all of these systems have trade-offs. Right. One thing I think that's quite interesting, though, is we've never really had good systems for doing this in a sort of wide scale way, right? A distributed way. Most voting systems rely on some kind of meat space system of, you go and obviously we're getting digital voting systems and that's getting better. But, oftentimes there's civil resistance built in. So you still want people turning up at a specific place, a polling booth or whatever it is, right? And so there's all of these restrictions that we have that exist that are kind of baked in these legacy systems, right? And one of the nice things when you have like a new enabling technology like the internet or mobile phones or now, crypto and decentralized consensus, is that you can really kind of challenge some of the assumptions that are baked into these systems and say, wait a second, do we really need this? Is this actually the optimal thing to have? And what if we removed it? What does it look like? And so I think that we're in the process of starting to ask those questions. It's still very early, but the idea that things like email and websites and all of the stuff that emerged from Web 1.0, changed how people communicated and how people got information and all of these things that were very a huge shift for society. I think the same thing's going to play out with crypto. It's just that we're at the flat part of the curve right now. We haven't even started to really see what the impact is going to be.
Yeah, but tons of room for innovation. I remember meeting some people in London and they're like, yeah, I really want to vote for you, Brian. Where do I go? And then they realized they had to register 6 weeks before with their local council, with the form they send in the mail, with the utility bill, and now they can't vote. And again, I'm not a conspiracy theorist, but it puts in
all of that civil resistance.
Yeah.
Right. Like it's all about it's all about ensuring that we have much better ways of ensuring that someone is, eligible to vote in crypto systems, right? Like within Synthetix, if you are a staker, we can verify that you are staking. We can verify your address. We don't need to verify you have an identity. We just verify that you are a staker who's participating in the network, and you can vote anonymously because we know that voting power is going to be exercised. And so, there's the civil resistance. So much of voting processes and overheads, I think, in traditional election systems is about civil resistance and ensuring that votes are fair. We can do away with a lot of that overhead in crypto systems.
Yeah, I really think that's interesting. Do you think, just as an aside, this will ever find its way into, democracy and voting actually for political issues?
Yeah, absolutely. I think there's no question that when you look at existing systems, legacy systems, and then you overlay crypto and you overlay the ability for people all over the world to kind of get together and coordinate, that is going to be a much more efficient process, right? And so that's going to challenge a legacy system that is being done in a much less efficient way. And I think we've seen this play out over the last 20 years with the internet, right? Anything that was reliant on meat space coordination has kind of been overwhelmed, for good and ill, right? By web-based, internet-based systems.
Yeah, it will be interesting to see how it plays out. We thought with all of our social channels, and then a lot of people couldn't actually move around, we thought we could get those messages and people would make that kind of independent vote. But I think we still have a little ways to go and see how that plays out. Just wondering if you have any big learnings, because you've been doing this longer than most, from the governance standpoint, learnings or things to pass on, to other foundations looking to make that transition as far as what works, what doesn't work, whether that's voting frequency or issues or council members, because you're literally learning on the ground.
Yeah, I think maybe even to use this example that you've given of your run for Mayor of London, right? One thing that I think we've found is that crypto people are very much single issue voters, right? Like they are really concerned about the impact that regulation and legislation is going to have on crypto and crypto adoption. And so we've seen people pop up who are actually trying to kind of hack the existing legacy systems and turn up and say, if I will run on a platform of pro crypto or crypto support or whatever, and we've had a situation now where crypto people have a lot of wealth, right? So they have money to donate towards these things, and also they are very good at coordinating. You've self-selected for people who are extremely good at coordinating, but you've also self-selected for some interesting things like adversarial thinking. And so one thing that I think that we found with our voting systems and governance processes is that any system that you devise will be attacked, right? People, if it's valuable, people will try and attack it. And so I think that the way that we've built our governance process has been very slow, iterative steps, because if you make large wholesale changes, you open yourself up to unintended consequences. And so I think that within crypto, we have a group of people that are very aware of how governance happens and why and all the right decisions that they want to see made, and they're willing to kind of put the time and effort in to ensure that those things happen both in crypto within the protocols that they care about, but also increasingly in the real world as well, which is exciting.
Yeah. super exciting. And for you, you've found that the best way that you've optimized is to have your token holders vote for council members who then make the majority of the decisions, as opposed to, I know like in California, where I was originally from, it had like Proposition 13, Proposition this, where a lot of times the public would vote on whether there should be a property tax increase, or the public would vote. And not necessarily the bad thing, but sometimes it can get very granular. The House of Commons is near here, and I'm sure my representative is voting all the time. There's, I guess, a fine line, right, between getting the public involved in every decision and then having an elected representative that's maybe in there too long. What's been that optimum for you guys?
So I think we have 3-month epochs, right? As opposed to, say, in the US, where people have been there for hundreds of years in some cases, I think, right? And so we kind of force turnover, right? And we force people to be reelected regularly, which I think helps with accountability. Which is another thing where you can't have a vote in the US every 3 months. Right, like the amount of overhead and cost hundreds of millions of dollars to run an election. You can't you have to, like, 4 years or 2 years, depending on whether you're talking about Congress or whatever, is like the minimum amount of time that you can do, because if you did it any less, it would just be prohibitively expensive. If you challenge that assumption, and that this is the case for a lot of in Australia, I think it's 3 years is the average time or whatever, right? If you challenge that assumption and say, well, hang on a second, like, what is the ignoring costs, right? Ignoring the overheads of voting, like, how long should we let people stay in governance, right? Maybe 3 months is too short, but we've been pushing the boundaries of these things to see, maybe it's 6 months, right? And if you ignore costs and you ignore voting overhead, you can elect people for a smaller term, and then force more accountability, because you only had 6 months of decisions to make, and people can look at that, history of 6 months and say, well, wait a second, the 3 biggest things that happened, I can now kind of pay attention and be like, wait, the person that I voted for didn't actually vote in alignment with what I was, wanting to see, and I'll vote for someone else next time who, actually is going to be more aligned with me. So I think those are just some really simple examples of ways that you can kind of improve governance processes by just having better technology and having, more efficiency in the system.
And then you personally, as a former semi-benevolent dictator of the Synthetix protocol, now moving to, I guess, a token holder that votes on the DAO, how does that change what you're involved with? Do you, obviously, I guess if you still have tokens, you get to vote these people into place, but yeah, as a Mindshift, do you step aside? Do you find you're talking to the community more? Are you listening more? How has that changed?
So when we first initiated the council, I was politely told not to run for council. There was a sense that I had enough social power within the system that it was not optimal for me to be on the council as well. So I think there were maybe 2 or 3 epochs, so about 9 months, where I didn't run. And then we kind of realized after about 9 months that there was a bit of a disconnect between the contributors who were building the protocol and the community and the people who were governing it. And that we needed someone to kind of be a conduit for communication between those 2 groups. And given that I had historically been that person, I decided to run for council. I think I ran for council now maybe about a year ago. So I've been on the council for about a year. I was just re-elected. So hopefully the interesting thing is I actually don't vote for myself. I vote for other people, because the optimal situation, if I think I'm going to get voted in, is actually to vote for someone who I think will agree with me. And then I've got 2 people on the council so there's some interesting game theory about, how you vote and what have you within the Synthetix system. But the end result is that I'm one of 8 people on the council, and regularly I'm on the wrong side of votes where I say, I don't think this is a good idea, and it gets voted in anyway.
Huh, that's fascinating. Now, when I ran to be mayor, I had a big bus called a battle bus, and I drove it around. I went 5,000 miles in the city of London. I went to every borough twice. I put out videos about my policies. I tried to do live meetups, but they closed most of them down. What else did I didn't get invited to debates by the BBC, even though I was number 2 in the bookies. How does my campaign look like different than, say, one of yours, or maybe the future of DAOs where people run for council? Because maybe that's obviously overdoing it in a system of country politics, but I guess there has to be some type of expression of vision and campaigning of some sort, right?
Yeah, absolutely. So, we see people, recently we doubled the stipends that we pay, right? Because we found that we weren't getting as many candidates as we wanted, right? And so a member of one of the councils now makes around about 150 to 200,000 USD a year. So it's a meaningful amount of money. They get paid in tokens, and depending on the price of the token on any given day, I think the average is around about 200 grand. So it's not an insignificant amount of money. And so I think what that's done is created a lot more pressure for really credible candidates to step up and run for these councils, because we have several. We've got a Treasury Council that manages the Treasury. We've got a Grants Council that manages public goods. We've got the Spartan Council, which manages protocol decisions. So we need credible people and qualified people in all of these roles. The interesting thing is that this last election was probably the most contentious and contested. And we actually had really close voting, and people were really, kind of campaigning and trying to get voted on. And I think that was due to the fact that like the kind of reward had been doubled, and people saw it as a very, good position to be in if they could get elected to one of these councils. And so, yeah, I think we will see, as the value of participating in governance in these decentralized organizations increases, we will see more and more people stepping up and getting more sophisticated and professional about how they communicate their policies and positions and governance style. The interesting thing is that all of this is done within Discord. So thankfully, no one has to run around the countryside in a bus.
Not yet.
They can literally not yet. You go into Discord and you talk to people in Discord, and we have voice channels where there are debates and things like that happen. But it's all done kind of through this Discord process as opposed to in real life.
That's fascinating, Kain. Did you ever think you'd be in politics?
I know, right? Yeah, honestly, I think when I was elected to the council the first time, a couple of my friends were like, well, this is kind of inevitable that you're going to end up here on some level. So, yeah.
It's fascinating. I'm just having flashbacks to our campaign, because what we did is we targeted YouTubers in London. We had 9 million citizens in London, and we found we could probably access the 6 million of them via YouTube. And obviously we've had a YouTube channel for 10 years. We had 2 million subscribers. And so we would pump in my campaign videos to targeted audiences, and just so they would become aware of us and get them onto the website. And so be very interesting to see how this plays out in blockchain governance. When I first started looking into this space, I thought, wow, it's one.
I'm kind of curious, did you run on Did you run a pro crypto campaign at all? Was that part of the campaign?
So just a quick history. It was April 2020 when I was in the studio broadcasting live on YouTube. It was the second largest live stream broadcast in the world. We had 65,000 concurrent viewers. The largest was Trump's coronavirus briefing that night. And about an hour after my episode, YouTube deleted and banned that episode. So we went into this really public fight for freedom of speech, digital freedom of speech, as I was banned by Dropbox and PayPal and all these other things for having conversations in this studio about what was happening at the time. Let me just say that. So we got into a real digital freedom of speech battle. And towards the end of that year, I thought, I'm having conversations about freedom of speech and lockdown, and the mayor of this city isn't doing anything about it. So that's why we ran. It wasn't until the end of that election that I decided to go kind of deeper and back into crypto and DeFi, even though we've been talking to Andreas and Max. If I had been a little bit deeper into crypto at the time, I'm sure it would have been part of that message. And I'm sure what we did in 2020 is we created our own platform called the Digital Freedom Platform, and we got one of the streamers from the Super Bowl, and we streamed our own video because YouTube wouldn't do it. But again, we had to crowdfund that because I wasn't that in touch in crypto. Could we have done it in May 2020? Possibly. You probably could have, but I wasn't as in touch with this community. So great questions, Kain. If I ran now, well, obviously crypto would be a huge part of the platform. I'm not sure that I will.
And I think it would be powerful. It would be very powerful, I would imagine. I mean, you've seen this happen, with pro crypto candidates in Miami and, New York. I think it's becoming a very powerful, plank in a platform.
Very much so. And again, I spent 15 years in the banking industry, and I saw all the nonsense that goes on there. And when I saw DeFi Summer, it reminded me of what I was doing as a fixed income derivatives trader in New York in the 90s, except, Kain, I had to have a bank with 20,000 employees with a balance sheet and a direct line at the Fed in order to offer these products. So it was us and Goldman and JP Morgan and a few others that could even create these synthetic products and offer them to our customers, as derivatives. When I saw DeFi Summer, I was like, wow, now potentially, anybody in the world can start doing this stuff. And that's when my mind was really opened, because I got to see from the inside what things I don't like about central banking. Good advice. Please don't twist my arm to go into politics again, because it's a pretty nasty business.
Sure.
Really fascinating talking to you about what this governance is like, because this is, I guess, going to be the future of running these blockchain protocols. I think the DAOs also aren't necessarily even legal entities, which also maybe gets around a lot of these problems that people are finding with where it is and who is taxed and who's the head of it, and are they in the Bahamas or the US, or, you see everything eventually going to that DAO and it being a part of a way of governing all tokenized protocols, all blockchain protocols?
Yeah, so I think it's a very interesting question, and I think it goes back to kind of an earlier point that I made around, if you have a more efficient system, it tends to replace the older legacy systems, right? Now that takes different amounts of time depending on how entrenched those systems are, and I think corporate governance and limited liability corporations and the typical structures you have in markets today are very entrenched. And so I think it's unlikely that those systems are going to be replaced, in a short amount of time. I think it will take time, but I do believe that for a lot of the things that we're trying to do in the world, the coordination that we're trying to achieve, that DAOs are actually a more optimal way of achieving that, right? So I think it's actually less about crypto governance. I think crypto governance makes sense. DAOs are very aligned. The bigger question to me is, when do we see traditional corporations being replaced with DAOs and being outcompeted by DAOs, and DAOs starting to really make inroads in large scale important structures within society? I think that will happen, but again, it might take 5 to 10 years before we sort of see that emerge.
Yeah. I'm saying probably closer to 10, but it'd be interesting to imagine if, Amazon shareholders, actually controlled that company. I guess technically they're supposed to, right? Technically the shareholders are supposed to elect the board, which is supposed to make the decisions and elect the CEO. But so obviously most people agree that it probably doesn't necessarily work that way. As far as crypto companies, some have been maybe slower to adopt this DAO model and some faster than others. And maybe before we talk about examples, if we do, DeFi, which is something that you spent many, many years on, does proper DeFi ultimately have to come from a DAO? Like, without that type of governance, will you not get, the right decisions for decentralized finance? Or do you think they're slightly separated?
I think, a corporation, a centralized entity, can still coordinate very well. Right. So there's nothing stopping a corporation from releasing a DeFi protocol, having it be totally centralized, having them make all the decisions. You lose some of the power, I think, and you lose some of the magic, obviously, which is, people needing to then trust that entity to continue operating it. But you can still get some benefits, I think, right? So like a hybrid, very corporatized hierarchical structure that is purely making all the decisions for a DeFi protocol could work, right? And we've seen examples of that where, like, for example, Compound Labs was in complete control of the Compound protocol for a very long time. All the decisions were made by Compound until they released their governance token and then handed over control to the community, and used a form of delegated democracy and delegated decision making to start allowing people to have a say in how the protocol is going to be run. So I think that you can transition, but you can imagine scenarios where you don't need to do that transition. You just have a centralized entity that makes all the decisions, and eventually you assume it will be outcompeted by a DAO, but it's not necessarily the case. I think that the bigger question is, why are we not seeing more DAO experimentation? And I think there's a couple of things that are hindering that. One is we still don't have very good tools for DAOs. Most of the protocols that are very deep down this DAO pathway are building their own bespoke solutions manage it. So, we've seen Balancer release Snapshot. We've seen, Yearn release Coordinate. We've seen, Compound release the Compound Governance module. Almost everyone is kind of rolling their own governance structures. And we haven't seen too many like pure governance projects. Aragon was probably one of the oldest projects on Ethereum, but unfortunately just didn't really work, right? It was supposed to be this generalized governance system. And it, ironically, somewhat, the protocol governance actually collapsed on itself and turned into this very acrimonious split and shut down the protocol itself. So there's maybe a lesson in there somewhere, I don't know. But I think, ultimately we are getting to a point now where we're seeing much better tooling emerge. And as that tooling gets better, we will see people be able to experiment faster, be more efficient in how they roll out these experiments and iterate and test. And we're going to see some incredible governance experimentation over the next couple of years, I think.
Could this be your next project to create that one size fits all governance, turn your foundation into a DAO, and with this system, or maybe this I don't know, maybe it's a bridge. I don't know. Is that something you might work on, or you think someone will work on?
So funnily enough, we actually have a internal project right now called the V3GM, which is basically the Synthetix version 3 governance module. And the V3GM is exactly that. It will eventually be spun out, like we have spun out other sub-DAOs out of Synthetix. So Dailies and Quenta and some other projects have been spun out of Synthetix governance. The V3GM will also be spun out, and it's being designed as a generalized governance system with all the lessons that we've learned through Synthetix governance. So absolutely, which is, I think at the beginning you asked me, whether governance is maybe going to be more important in the Synthetix legacy than even a derivatives platform. I think governance is very clearly more important than derivatives. As much as you and I might like derivatives and think they're very interesting, I think governance is a much more powerful tool than derivatives. And so I do think if the V3GM is successful, the fact that the V3GM emerged out of Synthetix may be a much larger part of the Synthetix legacy than even the actual project itself and the product that it's produced.
Yeah, this is so exciting. I'm so glad we're having this conversation because I haven't had it before. I've had people talking about moving to DAOs, and Hedera Hashgraph, Mance is moving to a DAO, and I've talked about their own resistance, their internal resistance of going from a headstrong entrepreneur into the system where they're no longer in control. But I've never talked about, someone who's done it on the ground and then potentially having something that can be spun out and plugged into other protocols so they can make that transition to DAO. And I agree with you, as much as I love derivatives, governance is probably one order or two orders of magnitude more important because it's how the decisions are made, let alone the instruments, right?
Yeah.
So,
agreed.
And as humans, that'll be something we always struggle with, to make decisions. People talk about the community being so important in crypto, and that's true, but what is a community? It's a community of people that share ideas and then ultimately do something about them, which I guess community maybe is governance. Maybe that's a whole nother social conversation to have. I want to talk about the details of Synthetix for sure, and any other governance thoughts I want to talk about. State of DeFi. Just curious if you can spend a couple minutes on where we're at. We're almost 2 years now since DeFi summer, anniversary. You obviously were in this space before that as well. What is the state of the union of DeFi?
So I think if we kind of slice up the Ethereum story into a couple of segments, right? We've got the sort of ICO boom, right? Where really the main activity that was happening was capital formation, right? This capital raising, very speculative idea. A lot of people raising money for things that they're going to do later, right? That kind of lasted from 2016 to 2018. There were some things that happened, but the vast majority of the activity was ICOs, right? Then after that, you had this 2018 to 2019 period where we were in a bear market. And as we got to the latter stages of 2018, everyone was looking around and realized, wait a second, the only ICOs that are kind of left, or the only things that people funded that are still kind of building, or almost the only thing that's left, are these weird decentralized financial structures and protocols. And so that out of that was born the term DeFi. And almost all of the things that were happening, all of the experimentation and excitement that came was this decentralized finance movement, right? And so you had Maker and Compound and Uniswap and Curve and Synthetix and all of these cool things, cool experiments, but they're all very financial in nature. And then you get to DeFi summer, right? And basically what happened is that DeFi made a victim of Ethereum, its own success, right? It turned this amazing story into actually, a huge problem because the network is not ready to scale. And all of a sudden you had, hundreds of millions of dollars worth of financial activity embedded on chain, connected to each other. And anytime there was large volatility in the market, there was just this flood of transactions, arbitrage transactions, and automated transactions that were happening with all these different positions and lending protocols and liquidations and AMMs and all crazy stuff, right? Which was amazing. This is exactly what we've been talking about. Ethereum could support, but it actually buckled under the load. In a way, similar but probably worse than it did when CryptoKitties, had a blip in late 2017 as one of the only non-ICO things that was going on and brought the network to its knees. DeFi kind of brought the network grinding to a halt over the course of like 6 months. The problem was that we had 3 years to scale and we hadn't managed it. And so all of a sudden there was an opportunity for some of these alternative chains to spin up their own nascent DeFi ecosystems and say, hey, come over here. We're faster, better, cheaper, whatever the argument was. And so Solana and Avalanche and Binance Smart Chain and a number of other alternative L1s emerged. And at that point, the original DeFi projects started to kind of fade in significance, and less people were paying attention. You then had this emergence of DeFi 2.0 on Ethereum, which kind of brought attention back for a little while. But ultimately, I think we lost a lot of new users who never, used the Ethereum ecosystem because when they turned up to crypto, they were, on Solana from day one or Avalanche from day one, right? And never did a transaction on Ethereum at all. Cut to 2022, and we finally scaled. So, however many years late you want to call it, 7 years too late, 3 years too late, 4 years, whatever the number of years is, we were too late, but we eventually got there. And now we have multiple scaling solutions. We have Starkware, we have Arbitrum, we have Optimism, and we're finally able to build a much more robust DeFi infrastructure on these layer twos. And I think we're starting to see all of the amazing engineers stayed and kept building throughout this period, but they just couldn't build and couldn't, really do the things they wanted to do because we couldn't scale. I think we're going to see this reemergence of Ethereum as the dominant smart contract platform over the next couple of years, as we really scale and bring all of this stuff back onto Ethereum via layer twos. And so that I think is going to be the next chapter. But it's been a winding path to kind of get there. Unfortunately, it's taken a lot longer than we would have liked.
Yeah, that's a great assessment of what's happened in history. I mean, again, I've been teaching in my DeFi Academy now almost for a full year, and I have about over 1,000 students now, 50 countries, and they go through a 4-week program. And quite frankly, Kain, I force them to do the things they normally would not do because it's uncomfortable. So they do basic wallet setups, but then they go ahead and do their first trade on Uniswap. They do a yield farming trade. They do a liquidity pool trade, and they just get them to do it in small size so they know what it's like. They experience it and they realize, oh wow, this is an option. And we just kind of get them into DeFi. Biggest complaint, as you can imagine, is the gas fees. I always tell them they're tuition fees, so pay them because you're learning something. And you spend more at the pub on Friday night than you do on the gas fee, and you'll learn so much more with one transaction. And guess what? Help is on this way. Either ETH 2.0 or we're calling it now just whatever, Ethereum evolving, layer ones, layer twos, help's on the way. But I'd rather you get a trade done in a DeFi sense than say, oh, I can get the same thing on Coinbase or something, So I try to get them into the mindset. But yeah, it's been a big sticking point. It's the biggest complaint I get every day. I obviously tell them it's tuition and we're going to move forward. But yeah, we're constantly having that discussion here about Ethereum. I guess you're an Ethereum maximalist. I haven't really had one on my show. So it's good that you're talking about these things. Would you call yourself that?
Yeah, definitely.
Would you call yourself that?
Oh yeah, for sure.
Okay.
100%. I've debated Kyle Samani. I've debated, SBF. I've debated many people on Twitter. And, I think we found ourselves in a very unfortunate position within the Ethereum community where we were a bit complacent. Also, we were tackling a very hard problem. We're trying to solve this problem in the right way, in a long-term way, and not, create more problems down the road. And that's hard. I think Vitalik posted something a couple months ago, a slide from like an old deck in 2015 where he was talking about proof of stake would be out in like 6 to 12 months or something like that, right? Estimation in software development is much harder than we think. But the thing that I've been sort of repeating is this L222 meme, right? Which is that we're actually finally there. We have workable layer 2s. DYDX is on Starkware. It works. It's a viable system.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.